Okay, thanks.
Yeah. Okay. Okay. All right, you are in. I don't know if you still remember.
Okay.
You still remember this analysis from last week? I once sent you this one on USH last week. You remember it?
Yes,
Somewhere
yes,
last
I
week.
remember
Yeah, somewhere. I think it was the
it.
first analysis. I think somewhere last week. When I said this is not what I do. This is not what I
Yes.
do. Yeah, I don't do signals. I do setups. This is what I was talking about. Remember?
Set up.
Yes. So this is the
Yes.
arrow. This is that arrow. I had two arrows. I did not remove them just to show. So this was the arrow down. The market was still here, if you remember. If you can check your WhatsApp, it's still there. Let me just do
Okay.
this.
Yeah.
Let me just do this. So I just want us to start here. Just noted it on WhatsApp there. So this was the arrow down, and then I was still expecting a push up. So this happened this week. So we're still expecting that push up. No? Okay. So let me start. Let me start. Let me start. So of course, with the with the lady, we have to start with the introductions. So I'll introduce myself. I'll introduce myself. My name is Robo Abdao. My name is Robo Abdao. I've been in the trading game for over 4 years. Been in the trading game for over 4 years, and yeah, I can say that we just started being profitable somewhere last year after finding out this strategy. By being profitable, I mean being consistent. Okay, I mean being consistent. Let's say we just found consistency, not law. All right. So that is me. That is my introduction. That is what I do. We eat the market every day, non-stop. So we're gonna have some challenges with the network because of load shedding. We're gonna have some challenges because of load shedding. Mm, oh, but participants are gone. Let me get. Do you have, Ravi? Do you have a headset that side? Ranjan, this thing is not. In like this.
Okay. Uh, seems as if everyone is having network problems, except for me, of course. Seems as if everybody is having connection problems. Because try to chime in. Right. Okay. There we go. All right, Donald. Donald is back. Okay. How's my uh how's my sound now? Is it fine? How's my sound now? Is it fine? Can you hear me? Can you hear me good? If you can hear me, just type there. Just type hi or let me know so that we can get started. Okay. Just let me know so that we can get started. Just let me know so that we can get started. Mm, okay, down. Okay. We're back. Okay. We are back. All right. Okay. So let me just start. Let me just start. Let me just start. Let me just start. Let me just start.
So,
Sure, sure. Let me start. Okay. Let me start. All right. So,
hey Alex, nishapage network yo.
oh, it's the network, ne? Yes. Also, the other guy has network problems, but just keep chiming in. I'll be recording. Just keep chiming in. I'll be recording. Just try to chime in. But then if it gets serious, then we'll have to reschedule. But the problem is that also tomorrow they said that they're gonna start implementing level 5 of this what you call load shedding. So I don't know how we're gonna go about that. Okay. So uh basically what is happening here, guys, ne? What is happening here, guys? We need to forget the way you trade. You need to forget the way you trade. You need to forget the way you've been trading before. Okay. You must give yourself room to learn new things. Okay. You must give yourself room to learn new things. Okay. So uh first things first. Um let me just get this. Okay, let's give it a try one more time and see. Okay. So, first things first that you need to know, Donald. First things first that we need to know. First things first that we need to know on the strategy is that we talk about the market nature. Okay, we talk about the market nature. We talk about the nature of the market. So, regardless of which market you are trading, it can either be currencies, indices, whatsoever. As long as it's a tradable asset, then the market moves in two ways. Okay, the market always moves in two ways. The market moves in a form of an impulse, correction, impulse. Okay, so there is no any other market. Each and every market moves in the form of an impulse, correction, impulse. So there's an impulse, correction, impulse. All right, can be impulse, correction, impulse. Okay, all the market move in in the form of impulse, correction, impulse. That is the market nature. Okay, that is the nature of the market. So basically we need to capitalize on this nature of the market. All right, we need to capitalize on this nature of the market. We need to capitalize on what we know. All right, we need to capitalize on what we know about the market at that particular time, at that given point. Okay, so for us to know we'll get to that. For us to know where we are in the market, we'll get to that. We'll get to that when we go deeper in the chart. But for now, you need to know that the market moves in two directions. Okay, it's an impulse, correction, impulse. Okay, and then again, impulse. If it's down, correction, impulse. Okay, and when you look at these corrections, you can see that these corrections are opposite the trend. Okay, a correction is always opposite the trend. Okay, so we as traders, we want to get caught here. We want to get caught here on the impulsive phase. All right, we want to get caught on the impulsive phase. We don't want to get caught on the on this whole correction. Okay, we don't want to be there on the correction. We want to be we want to get caught on the impulsive phase. So let me just do this. Let me just go to quickly to the chat, and then you'll see what I'm talking about. Okay, let me just go. Yeah, okay, there we go. Quickly at the chat. Okay. So knowing that the market always moves in a series of impulse, correction, impulse. Okay, impulse, correction, impulse. All right. So if you look at this here, you can see we have an impulse. There we go, impulse. Okay, and then after that, what do we have? This is just a deeper correction. Correction. All right. This is just a deeper correction. Okay. This will just be a deeper correction to form a structure like this. We'll get to that. This is just be a deeper correction. All right. So we have this impulse, correction, impulse. Already we're expecting another impulse. Okay. That is exactly how the market always moves. It doesn't matter which market you are trading, the market always move in the form of impulse, correction, impulse. All right. It's impulse, correction, impulse. Always, always. So that is the basis, or that is the market structure or the market nature. Okay. Regardless of which market you are trading, regardless of which market you are trading, let me just zoom in here. Let me just zoom in. Let me show you a bit of more examples. Okay, there we go. What do we have here? We have our impulse, correction,
Impulse correction,
impulse,
impulse,
correction,
yes,
impulse, correction,
correction,
impulse, correction, impulse here. And then looking at this impulse here.
correction,
It's not of a big enough for impulse to can say that this will continue going further. Okay, because an
yes,
impulse must always break the previous structures. Okay, when you check on your left side, all right, the impulse must always break the previous structures. So that is exactly how the market is. It always moves like that. So we don't need to get caught in all this news and whatnot and whatnot. You understand? So one thing I realized again, like just today, I saw a lot of people on the NFP. I saw a lot of people selling gold. I don't know why. I don't know why people were selling gold. I don't know why people were selling NAS. I don't know. But oh well, people trade in different ways. But then yeah, we went in and bought. Okay. So uh let me show you here on a downtrend. On a downtrend again, what do we have? We have an impulse is a series of momentum candles, okay? A series of momentum candles to one direction, okay? So going to the downside, what do you have? We have an impulse here, and then what do we have? We have a correction, okay? You can see a mini correction there, an impulse here. There we go. And then here we just have a deeper correction. And then we have what
true.
we have. This is all an impulse. So after all, this whole move is an impulse. Okay. And then after that, we have these. Ooh, network again. Oh, okay. Seems as if you jumped back in. Okay. All right. Let's
I'm
go.
back.
Okay, sharp.
Yes,
Let's continue. Let's continue. Let's continue. Let me remove all drawings. So that's all you need to know. Impulse, correction, impulse, correction, impulse, correction, impulse, correction. That's how the market moves. It always moves like that. So how do we capitalize? We need to know how do we capitalize on all this, okay? We need to know how do we capitalize on all this impulse correction. So in each and every time frame, it's always like that. Let me just go down to the daily now. Let me show you. Let me go to the daily time frame. Going down to the daily. It's always like that. Each and every, doesn't matter which time frame, the market always moves like that. Looking at the daily, what do we have? Impulse here, and then we have a correction here, and then an impulse, and then here, this is just a deeper correction. Okay, and the market from there just moved up correctively. So, okay, and then here we go in a correction. We have an impulse there, and then what do we have here? Another correction. After this correction, what do you expect? An impulse. Okay, so we need to know in the market, where are we? Okay, where are we in the market? Are we in the impulsive phase, or are we in the correction phase? So we don't need to get caught in the corrections. Okay, we don't need to get caught in the corrections. So for us, we know that if it's impulse, correction, impulse, we want to get in on this impulse. We want to get in on this impulse. We don't want to get caught on all this correction. This is frustrating. This is frustrating. This is where you'll hold a lot of drawdowns. Okay. We don't want to get caught in all these corrections. We don't want to get caught in all these corrections. So now you know how to draw trend lines, but now I need you to forget how you draw trend lines. Okay. I need you to forget how you draw trend lines for now. I need you to forget how you draw trend lines for now. Okay. So let me just go deeper on the impulsive phase. Okay. Uh, in the correction phase, okay, in the correction phase, we have an impulse, we have a correction, okay, we have a correction. So in the correction phase, what we need to know, because most of our trades will take them on the last leg of the correction phase, waiting for the impulsive move. What we need to know on the correction phase is that, is this correction a continuation correction? Okay, there is what we have, a continuation correction or a reversal correction. Okay, is it a continuation or a reversal correction? Okay, so if we have a continuation most likely you'll get it in the form of we'll get to patterns when we go deeper. We'll get to different types of patterns when we go deeper, but a continuation, you'll get it in the form of, let's say we had an impulse, and then you'll have something like this. We have something like this, the market will scroll down, and then it will give you something like this, which we'll call a bull flag, which will be a continuation. Or if it's going down, then we'll have something like this. It will crawl up, which we'll call a bear flag. So we know that it's going to go down. Okay. So what you need to know again on these corrections, what you need to know, uh, we'll talk more about it when we get to the patterns. So I don't want to overwhelm you with I want to take it bit by bit. Okay. I want to take it bit by bit. I want to take it bit by bit. I don't want to overwhelm you. So what we need to know
Yes,
now,
yes, yes, yes.
yeah. So what we need to know now, we're in the we are in point number 2 here. We're in point number 2 on the market nature. I'm explaining the market nature, the impulsive and the corrective phase of the market. All right, we need to know the impulsive and the corrective phase of the market. Okay, so now, uh, now we need to know again that on the daily, okay, on the daily, on the daily, okay, on the daily, if you have one impulsive wave on the daily, okay, on the daily, if you have one impulsive wave, this is equals to 3 impulsive waves on the H4 time frame. Okay, on the daily time frame, you get it, on the daily time frame.
Yes.
Yes, on the daily time frame, one impulse equals to 3 impulse on the H4, and then one impulse on the H4 is equals to 3 impulse what on the H1. Okay, so you need to understand that. Okay, you need to understand where are we. All right, you need to understand, because on the daily you can find let's say for example an impulse like this. You can find a big impulse like this, and then you don't just have to go and jump in. Okay, you don't just have to go and jump in.
Okay.
Yeah, you don't just have to go and jump in. Let's say you open your chart and then you find an impulse like this. You can just come and buy here. As much as this market you can see still going up, you can just come and buy here, because look at this drawdown here. And all this drawdown is what is, the market is going down correctively. You see it impulsed up and then it corrected. And then here, this was our entry. This is our entry trigger here. And then we went all up with the market. Our first target here. And then from there, our target here. Okay. That's basically it. We keep it simple. We don't need a lot of things, no indicators, nothing. We keep it simple. We keep it simple. We keep it simple. Okay. So now, um, let me go now to number 2 on trend lines. Okay, on trend lines, how do you use trend lines? How do you use trend lines? How
Yes.
do you use trend lines, and when do you use trend lines? Okay, so here in this strategy, we use trend line to get the framework of the market. Okay, we use the trend line to get the framework of the market. We don't use trend lines as our entry points, trigger points. We don't say, no, the market broke the trend line, we can enter. No, 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 no. Just because the market broke the trend line, it doesn't mean that the market is going to go in that direction. There are a lot of confluences. There are a lot of confluences that are needed. One. There are a lot of confluences that are needed. So here, this is how we draw the trend lines. We draw the trend lines to get the overall market structure. Okay, draw the trend lines to get the overall market structure. Okay, and then of course we do use the trend lines to get the trend of the market. We don't need those what you call those moving averages and the likes. Those ones they end up confusing you. You go to the H4, it's telling you something else. You go to the H1 time frame, it's telling you something else. You go to the M15, it's telling you something else. So you need to master it. All right. So this is what we do here. This is what we do. 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 Let me show you. Let me show you. So let's say for example, it's a Wednesday. Let's say for example, it's a Wednesday. Let me just do this. Okay, network. Okay. Let's try to wait. Let's try to wait. Let us try to wait. Let's try to wait. Okay, we're back. All right. Okay. So we're still going on the trend lines. We're still on the trend lines. So this is how we go about it. This is how we go about it. This is how we go about it. We're gonna start on the weekly time frame, Antoine. We're gonna start on the weekly time frame, all right? Start on the weekly time frame, Brafa. May we start on the weekly time frame? So this is where we're trying to find the structure now. We're trying to find the structure. We're trying to find out what is happening, okay? Trying to find out what is happening in this market. So we need to know the overall bigger picture. We need to know the overall bigger picture so that we go with the higher time frame momentum. Ne? Sure. So now when we look at this market here, you can see that the market went up correctively, came down, impulse correction. So what you do here, basically the first thing that you need to do, you connect the ultimate lows that we see, connect the ultimate lows, connect the ultimate highs. See, one, two.
I'm back.
Okay, sure. Okay. So, okay, I just hope you saw what I was doing here. So this is basically what we do. Ne? You go to your weekly time frame. Okay. Go to your weekly time frame. Go to your weekly time frame. And then on the weekly time frame, this is where now we're going to find out where are we on the weekly time frame? Where are we on the weekly time frame? So we're gonna be connecting those points. So after each and every impulse, we're gonna find a correction and connect the correction and find out what type of correction it is. Ne? It's a simple exercise. Ne? So firstly, we can see, okay, this is how the market came by here, right? On the left-hand side, we're going to break this down slowly but surely. We're going to break this down. On the left-hand side, what do we have here? What is this? Impulse.
Correct. Impulse.
Impulse. Ne? And then after this impulse, what we have? The market went
Correction.
correction. And this correction started here all the way to here. All right. This is how this correction is.
Yes.
This is how this correction is like. So I connect this, I connect this. So this is my correctional point. Okay, this is this
Yes.
whole move here. This whole move here, it's a correction. And take a look at this. This correction started from the, let me show you something, started from the 18th of 15th of December, and then the market broke out on the 24th of December 2012. It started on the 15th of December 2008. The market then broke out on the 12th of November 2012. You see, it took a long time. It took a long time, but let me show you something. Let me show you how this let me show you how this strategy is like. Let me show you. Look at this. This is 2008. You see this impulse? This impulse.
Yes.
This is 2008. Do you remember what happened in 2008? In 2008, the market crashed, right? This is the 2008 market crash here. This is the 2008 market crash. This one. That's the 2008 market crash. Let me show you another one. Where's that one on COVID? COVID, the COVID
Oh
crash.
yeah, 2020. Yes.
Let me show you the COVID.
Market crashed again last
Yeah,
year.
yeah, yeah. Same thing, same thing, same scenario, man. Same scenario. There's nothing like that's why these guys till now on our side, it's a good thing because we always anticipate what's going to happen. We always anticipate what's going to happen in the market. I can't find it here, but I'm sure we'll find it as we're working because especially on the US pairs, the USD pairs, this is Euro JPY. So after this correction, we had an impulse. We had an impulse. You can see we had an impulse here
Yes.
all the way to here. So from this impulse, this move came down, started to form what? Another correction here. See, we had an impulse
Correction.
from here,
Yes.
and then from here, this is where the correction started to form. See,
Yes.
so this is where we are now. This is on the weekly. This is on the weekly.
Mm-hmm.
This is on the weekly. So this
Basis.
is, yeah. So this is the weekly. So this is where we'll be trading. You see, 1, 2, 3. So what we basically look for usually is the third touch, ne? The third touch of our inner or outer structure. You see, the third touch
Okay.
always has higher probabilities. You see, the third touch always has
Oh,
probabilities. So the third touch always
third
has,
touch.
yes, the third touch. And for a correction to be completed, it must have at least 3 touches. You understand? For a correction to be completed, it
Okay.
must have at least 3 touches. And we know that the market is going to break out. You understand? So here we have,
Okay.
let me show you an example. Here we have impulse here. And then this can be our first touch. This is our second touch. This is our third touch. What happened? Outwards. You see?
Yes.
You see, after the
Impulse.
impulse. Yeah. So that's basically what we have. On the third touch, the third touch gives us the highest probability. So on the third touch, that is where we'll be most likely looking for our price action. What is happening there? Are we getting a double bottom formation? Are we getting a head and shoulder formation? Things like that, on our third touch. Not that we just go on and start looking for a head and shoulder everywhere. Okay. So just like here, we know that here we had our first touch. This can be our second touch, even though it did not have to touch here, but this can be counted also our second touch because, of course, it's a lower low, all right? A higher low, I mean. And then from here, this is our third touch, okay? You can see overall we are in a downtrend, okay? So in a downtrend, what do you want to be looking for in a downtrend? You want to be looking for sell positions, okay? In the downtrend, you want to be looking for sell positions. So we need more evidence. Once what? We need more evidence. We need to build a case of evidence. We need to build a case of evidence. Once what? Sorry. Let me just do this. Okay. Ibu, come back, come back, come back. Okay, sure. You're back there.
Yeah, I'm back.
Okay, let's continue. Let's continue. Let's continue. All right. So from there, now we need to check. Okay, the left hand side. First things first, we check the left hand side. What happened on the left? Okay. So here on the left, we're going
Mhm.
to come and mark up these ultimate highs, which are these ones. And then here we'll mark this ultimate lows, the latest lower lows. Okay, there we go. So let me remove this structure because already we know that what kind of structure we are in and we know what we are expecting. Okay, we know what we are expecting. So now let's drop down to the daily. Drop down to the daily time frame now. Okay, where the daily time frame, where the daily time frame. There we go. These are my lows. There we go. So this thing is simple, Chief. This thing is simple. This thing is simple. You just look at the daily. Look at this. You can see that here we had an impulse and then correction, impulse. But then here on the daily, we just need the structure. We need the outer structure. We need the outer structure. Okay, so just come here, connect the ultimate lows. Simple, this thing. Connect the ultimate lows using your trend line like that.
Mhm.
And then after that, you come here, connect your ultimate highs like that. Okay. Yeah, let's take that off. Connect your ultimate highs like that. Okay. So there is a structure that we like. There's a structure that we like. We call it we call this an ascending wedge. This is an ascending wedge structure. Okay. This is an ascending
Okay.
wedge pattern. This is an ascending wedge structure. Already we can see that on the overall picture or on the daily, we have the ascending wedge. And then again now,
Mm.
what did I say about the touches? What did I tell you about the touches? You remember what I said about the touches?
Yes,
One,
three touches,
two. What is this?
three.
What do we have? What do you see now? What do you see on this candle? Do you see this strong impulsive move down?
Yes.
That is already our confirmation that Chief, next week we'll be looking to sell this market. Next week we're not going to be looking to buy these markets. Next week already we know that we'll be looking to sell these markets.
Oh,
See, we know that
okay.
already we had our first touch, and then on that third touch, what we have, you can see we have a reaction there, but we'll get to there. We'll get to how we are building a case. Okay, we are building a case of
Mm,
evidence.
mm,
We are
mm.
building a case of evidence. So when we look on our far left, when we look on our far left, okay, when we look on our far
Mhm.
left, remember we have this ultimate highs here. Okay, we have this ultimate highs here. We have these ultimate highs. But then after this ultimate highs here, what happened? We also have this double top formation here, this impulse here,
Okay.
double top. But if we go down to the weekly, let me show you something. If we go down to the weekly, let me show you what we will have here on the weekly. Okay, there we go. On the weekly, we have this strong impulsive move. Okay, in the weekly, we have
Mm-hmm.
this strong impulsive move here, this strong impulsive move here. And then after this strong impulsive move, we had this correction here. Okay, we had this
Mm.
correction. And then from there, the market again came back and tested this area here. This is the weekly order block. This is the where the weekly order block is. So whenever the market comes back here, we're gonna expect a retest. We'll get to order blocks later on the stage. We'll get to order blocks
Oh,
later on the stage, but whenever the market will be coming back here, we'll be expecting something. We'll be expecting a retest. We'll expect something. What is happening? We'll check price action. What is happening when the market
so
comes
what
down?
is what is what is a retest?
A retest is basically when the market broke out and then came back to test that area. Okay, just like here.
Oh,
So it can
yeah,
be
yeah,
short
yeah.
term, it can be short term, it can be long term. So I want you to,
Mm.
so for us, we look at the market in a long term perspective. Okay, so this is what we have. You can see, okay, this is the impulse. You see, this is the impulse, and then from there, what we have. This is the correction. So this is basically what's happening. You see, this is the impulse, this is the correction, the impulse, the correction. You see? You
Oh,
see, on the bigger time frame, when I zoom out,
okay.
again
Yes.
we've already checked it. Okay. So when you zoom out on
Mm.
the bigger time frame, you can see that we have that impulse, correction, impulse,
Correction,
correction,
impulse,
impulse.
correction,
Yes.
impulse.
And then the market will then go up. You see?
Okay.
And then it's gonna go up from where? From here. And then where will this here be? When you check here, we'll have our 1, 2, 3.
And then three. Yes, yes, wow.
So already we're expecting that the market is gonna come back and give us the third touch on the downside. Okay,
Mm.
before any movement to the upside, before any movement to the upside, we're expecting that the market will come and give us a third touch on the downside. Okay. So let me just get those things back together. Uh, those are the ultimate eyes. Check these ones. Okay. Simple these things. Simple, 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 simple. You keep it simple. You keep it simple. It's not rocket science. Just keep it simple. Just like that. You just keep it simple. Just keep it simple. So whenever you find your structure is relevant on all time frames. So that's why you need to draw your structure on the bigger time frame. Abo. That's why you need to draw
Okay.
your structure on the bigger time frame. So that if you draw it on the bigger time frame, then it becomes relevant to all lower time frames. Abo.
Yeah.
Just like when you get reversals, you cannot get a reversal confirmation on the
Shorter.
on the shorter time frame and you expect it to reverse big. You see, it's
Mm.
impossible. It's impossible. So let me just put this here. Okay. So I can still see that the market still has a bit of a space here on the upside. Ne? Still has a bit of space here on the upside. But I'm looking at how this candle, how this week will close. If this week closes below this horizontal line, as long as the market is below this line here, you see this line, the second one, or what? The second one, we'll be looking for sell positions. You understand? We'll be looking for sell positions because overall we can see that this whole market just came back to retest this area here, this area that it created on the 13th, 9th of April 2018. It's retesting it now on the 7th of June 2021. You see? And when this happened, look at how the market went sharply down. How the market went sharply down. Where is this? I want to show you something. I want to show you. Uh, it was last year. Okay. So, no fun. Okay. I want to show you something now. This is what I meant. This is okay. So this is COVID. COVID started last year around, let's say, somewhere here. So you can see that this whole move here, it was when COVID was happening, March 2020, until somewhere May, the market started to go up. So this whole move, you can say this is when COVID was happening. And look at this, it was just completing the overall structure. It was just completing the overall double bottom here. You see, that's a double bottom structure there. That's it's what we call a double bottom. So the market was just completing a double bottom, and then they pump us. They pump us with news. They say, "Hey, there's COVID. This is what's happening." Then they change the market structure. That the market goes the opposite direction. But on this method, you always anticipate. That's why we don't get affected by news usually. That's why we don't get affected by news. Baba. So now, um, we're on the daily, né? We're on the daily. There we go. We already identified that we have an ascending wedge structure here on the daily. Ne? So already we know that we are looking for short positions or sell positions. Ne? We know that we are looking for sell positions already. Look at this. Oh, this is beautiful. This is beautiful. Look at this here. That's our confirmation. You can call this a shooting star, or I don't know, but that's our confirmation. That's our candlestick confirmation. After that, we have a strong impulse. So what we're expecting next is a small pullback here, and then a continuation to fall. That is how next week we'll be anticipating this market to go by. Okay. So it's good to know, it's good to know, it's good to anticipate, it's good to being able to forecast what is going to happen next in the market so that you have an edge on the market. Okay. So it's not just a matter of entering. So I know that if next week I'll be waiting for a small pullback to this area here, I'll be waiting for a small pullback to this area, and then I'll enter my short positions. It means that if I don't get this pullback to this area here, I will not take that trade. Okay. I will not take that trade because that will be like FOMO. Okay. It's FOMO, fear of missing out. Okay. There are tons and tons of opportunities each and every day in the market. There are tons and tons of opportunities. All right. So now let's drop to the 4 hour. Let's drop to the 4 hour. Okay. We've dropped down to the 4 hour time frame. Now, this is where things start to get interesting on the 4 hour time frame, because this is where now we are going to start to identify what is happening within that structure. Okay. Within that structure. So I want you to go with me. I want you to go with me. I'm going to start from the beginning of the structure, where the structure started, so that we can go together. We can go together. Let's just zoom out. Let's zoom out. Okay. I'm going to pull my trend line. Okay. We have an impulse here. All right. And then a correction. And then overall, this year, we have this. There we go. Impulse, correction. We have an impulse here. And then let me just put this. This is happening inside, né? It's inside the structure now. It's inside the structure. Remember, we're building a case of evidence. We're building a case of evidence with our impulse. Sorry. Impulse. Correction. Impulse down. Correction here. See. We had an impulse, and then we have a correction that started here. Somewhere here. Mhm. And then we had an impulse here. There we go. There we go. The market doesn't change, my guy. The market doesn't change. Okay, there we go. See. See, this is how we get to the point where now we have built a lot of cases of evidence. Remember, remember where we are on the daily time frame, ne? You remember where we are on the daily time frame. We are on the third touch, okay? This is the third touch of the outer structure here. This is the third touch. And then now, coming inside, coming inside, this is the H4 structure. We have what? One, we have two, we have three, okay? Again, that is another confluence. Okay. So inside the H4 structure, we have our 1, 2, 3 touches already on the H4 structure. Okay. On the H4 structure. So what we like to do here is to keep it simple. To keep it simple, I'm going to remove everything. I'm going to remove everything because we already know what's happening there. We already know what's happening down there. So I'm going to keep it simple. There we go. Come to the H4, connect. Because I get it, you already know what's happening. You already put it on the back of your mind, or you put it on a notebook or something, Put it on the back of your mind, or you put it on a notebook or something. You note it down, or okay, this is where we are on the outer, on the outer structure. You note it down. This is where we are on the outer structure, and then from there, it is then that you can execute the trades. Okay, so when you go to the H4 time frame, you will see we have almost the same type of formation. We have almost the same type of formation. So here on the H4 time frame now, we're going to pull out my highest high and my lowest low. There we go. So I know that whenever I have a formation like this, whenever I have a formation like this, an ascending structure like this, whenever I have an ascending structure formation like this, what are you expecting? When you get an ascending structure like this, you're expecting that the next move is going to be the impulsive phase, okay? Because this is an impulse correction. And instead of this correction, looking at this correction, this is not a continuation correction, this is a reversal correction. So we have our 1, 2, 3 touch here, and then after that, we're going to go all the way down here, okay? And then from there, it is then that we might go now all the way to retest the bigger time frame lows, okay? All the way to retest the bigger time frame lows, which is somewhere around here, okay? That is if we get the reversal that we want. But for now, not being greedy, this will be our first target for next week. This is going to be our first target for next week, come to think of it. But we'll do this on the Sunday session. On the Sunday session is then that we will what you call, we'll cover the weekly analysis of the week to come and how we're going to look at the trades and take them, okay, on the Sunday. Okay, so now let's go back to our structure. Let's go back to our structure. Let's go back to our structure. See, connected the points. You can literally do this with your eyes closed. Like it's that simple. It's that simple. It's not rocket science. So there we go. There we go. That's my H4 structure.
Okay.
Let me zoom out now. I'm gonna go to the hourly. I'm gonna go to the 1 hour structure. I'm gonna go to the 1 hour time frame. See, structure doesn't change, guys. Structure doesn't change regardless of the time frame, okay? Regardless of the time frame. So what do we have here? We have a market here on the 1 hour. We had a market here that impulse correction. There's our correction here. Just coming to recent price, ne? Want to focus on recent price. Impulse correction, impulse, and then what did we have here?
Okay.
A correction, which was just a flat correction. Okay, this was just a flat correction. This was just a flat correction. It's a flat correction. So a flat correction, if the market, there's no progression here, if there's no progression, we know that the market is about to reverse. Okay, the market is about to reverse because the natural progression of the market, it has to be impulse, correction, impulse, correction, impulse. That is the nature of the market. The market is always looking for ways to go forward. So if it is not going forward, what happens? It has to go back. Okay, it has to go back, which means that the market has to reverse. Okay, the market has to reverse. So this is the reversal structure or the reversal formation that the market gave us here when it got to the top. So we impulse up and then corrected, tried to impulse and get out, but we did not, and then corrected, and then we just start trickling. We just started trickling. Okay, so after that, what do we have? Look at this. This is beautiful. This is beautiful. After that, the market broke out. Okay, this is what you can call a break of your trend line per se, but for me, it's not a break of a trend line. It's a break of what? Structure. Okay, it's a break of structure because overall, the market has been trading within this structure. Okay, within this structure, and then all of a sudden, what happens? The market went out of the structure. Okay, the market went out of the structure. All right, it went out of the structure. So for me, it's a break of structure, not a break of what you call trend line. You can say it's a break of a trend line, but we're looking at it at a break of structure because this overall structure is the one which give us direction. Okay, we have an ascending channel here, and then inside impulse, flat correction, we had an impulse down. Okay, you see, we had an impulse, correction, impulse. So after this impulse here, after this impulse, we expect that the market, when it breaks out here, okay, we expect that when the market breaks out here, it will give us a retest. So if I show you these candles here on the lower time frame, I'm sure it's a bull flag or a bear flag or something. If I just show you those candles on the lower time frame. So when we build a case of evidence, we're going to use all these time frames. We're going to use all these time frames. We're going to use all these time frames. So let me just show you here on the 15 minutes. Okay, 5 minutes is not clear.
Okay.
On the 30 minutes,
Mm.
you see, on the 30 minutes, these are those candles here in the form of a correction. If I just go to the 15 minutes, it might be a bit clearer. Might be a bit clearer.
Perfect.
Yeah. So if I go to the 15 minutes, this we can see it was a correction and then it retested and then we continued to go down. So now let's go back to our 1 hour, because this is where now we're starting to look for case of evidence. We're starting to look for cases of evidence. We're starting to we want to try to find where are we going to enter this market. Okay, we want to try where we're going to enter this market. So this is now where we can start to look for our what you call, since we broke out here, we know that we retested. Okay, we had a retest here. Then for me, what I can see here, what I can see basically what is going to form here, already I can see, okay, we broke out of structure. After breaking out of structure, I'm expecting this market here, after breaking out of structure, I'm expecting that this market will give me some sort of a correction, right? Some sort of a correction before we have this fall. Okay, so I am anticipating that
Yes.
this market will give me some sort of a correction before this fall. And when you go to your let me just remove this. Let's zoom in again on the H1. Okay, on the H1, for those who trade support and resistance, you can do this. You can have something like this. We don't do support and resistance yet. We don't do that yet, chief. You can do this. You can do this. You can do this. You can do this. But we don't do that here. We don't do that here. We don't do this. Because why? You know why we don't trade support and resistance? Because any given point at any given time, it can be support and resistance, any random point at any random time, because price does not stay at one point. You understand? So that's why we always take the recent prices. You understand? So if, for example, let me show you something. Let me show you something why I'm saying this. Let's say, for example, a Hoy, let's say, okay, let me say, let me go to, let's say for the 1 day time frame, from the daily time frame. Let's go to the daily time frame. If I can just hoy a random line at any given point on the market, let me just hoy a random line, horizontal line at any given point. Let me just hoy it here. You can see, you can now say, oh, this is a resistance, it's a support, or whatsoever, just based on, okay, it touched here, it touched here, it touched here, it touched here. You understand? So any given point at any given time of the market, it can be a support, it can be a resistance, but we need to focus on the recent price. That is where it gives us the most recent and accurate price action. We get the most recent and accurate price action from the most recent price. Okay, so you saw how we go down from the market from the weekly. You saw how we broke out from the weekly all the way to the 1 hour, right? You remember on the weekly, you remember where we are. The first thing, you remember where we are on the outer structure. We are on the third touch, ne? And then again on the 4 hour, we got to the third touch. And then now what do we do? We broke out, ne? We broke out. Now, we need to ask ourselves, when the market breaks out of this structure, ne, you need to check something. It's not a matter of just saying, okay, the market broke out, let me jump in. No, when the market breaks out of this structure, you need to check, how did the market break out of the structure? Okay, the market, did it break out impulsively or did it break out correctively? So okay, so if it broke out correctively, then the market is bound to uh to come back. If it broke out correctively, so the market is bound to go back. But if it broke out passively, we know that what we're going to have next will be a correction back, a short correction, and then followed by another impulse. All right, followed by another impulse. So that's where we want to be. That's where we want to be. We want to be on the right side of the market. We need to be on the right side of the market at all given times. Okay, it's all about being patient and waiting. So already, you don't need to counter trend. You don't need to counter trend the trade. Okay, you just need to be patient. You just need to be patient. You just need to be patient enough and wait. Just need to be patient enough and wait, and then look at how the market will react and how the market will come to play. Okay, so now here, moving right along, we'll get to this. This is what we call evolving pattern, where we tend to evolve with the market. Okay, so we cannot say that already. We can see that, okay, we broke out here, but then even though we broke out here, this market has not broken this recent lows. Okay, it has not broken this recent lows. Let me just put my horizontal ray here. It has not broken this recent swing lows here. Okay, so until this market breaks these swing lows here, it is then that we'll have a full confirmation to can say that, okay, this market is going all the way down. But this is on the 1 hourly time frame. Okay, this is on the 1 hourly time frame, so it might take time for it to happen on the 1 hourly time frame. That's why we need to use all these time frames, okay, to our advantage. We need to use all these time frames to our advantage. We're building a case of evidence with time. We're building a case of evidence. So now let's drop down to the 15. Let's drop down to the 15. Drop down to the 15. Then now here, when I get to the 15, I'm looking at the market like this. I'm looking at the market like this on the 15 minutes. I had an impulse here. Okay, the market just trickled. This is news. So this structure could be something like this. This is just news, extended structure. This impulse, it's too much news here. Then we had an impulse here. Then now what we have, what is forming here? Okay. Okay, welcome back. Welcome back. All right. So what is happening here, guys? This is what happened. Where was I? I went to the 4 hour. This structure or the market is changing. Let me go to the 4 hour. Look at the 4 hour like this. Okay. I need to put this one here now. Okay, you might be asking yourself, why did I put this trend line here? Okay, why? I just evolved my structure. I just evolved my structure because I can see that there is no progression here. And until I see this market break these lows, then we are still on a bullish trend. Okay, we're still on a bullish trend. Until this market break these lows, it means that we are still on a bullish upward trend. So basically what's happening here, this market is basically just retesting this order block, here. There's an order block here. We'll get to the order block on the next lessons, but for now, let's take it easy. Let's take it easy. Let's take it slow. Let us take it slow. When you what you call, when you go into the market, when you go into the market, you shouldn't be biased. You should just look at the structure, look at what the market is giving you, and then you just go with it. Okay, you just go with it. Just look at the structure, look at what the market is giving you, and then at that point of time, you go with it. So already I can see, okay, there we go, we retested here. So now what is going to happen? I'm still expecting, we'll see what will happen when this price come back to this lows here. If this price breaks out here impulsively, then we're still going to continue with the bullish trend. Remember on the weekly time frame, what we said on the weekly time frame, the first thing we said on the weekly time frame here, we said that go to everything. You remember we said that these lows, then there were this highs here, all right, this highs here. So we said that if this candle here closes below this highs here, this is the weekly, né? So if this weekly candle closes below these highs here, we know that we'll be looking for sell positions going down. Okay, we'll be looking for sell positions going down. So it means that on the daily time frame, we'll just be waiting for that retest. So that is why now we need to monitor what is happening here. We want to see this break. We want to see this candle here, this candle closing below this candle. You see it? So on the daily, it's just this one candle closing below this candle here. That is our ultimate, ultimate point. That will be our ultimate point. That will be uh, uh, our entry trigger. That will be our entry trigger. All right, that will be our entry trigger. So what do we do? Of course, we wait. We wait. Ooh, okay. Okay. Let's go. Okay. Hmm. Oh, this network. Mm, okay. All right. Okay, good. We're back online. So there we go. So that whole candle, ne? That whole candle on the daily. Remember what we said. We want to see this candle here. This is one candle. We want to see this candle closing below these lows so that we can say that we are going down. So if not, then we'll have this retest and then move down. So if we do have that retest, it means that if we do get that retest, it means that we'll be getting a formation like this. If we get that retest, we'll be getting a formation like this. If we get that retest, where is that? If we get that retest, we'll be getting a formation like this. If we manage to get that retest, let me just, there we go. You see, if we get that retest here from here, all right? If we get that retest here from here, we'll be getting a head and shoulder pattern. I know. I mean, if you've been trading, you've heard of head and shoulder pattern, the inverse head and shoulders, and the likes. So once you get that retest, this retest, which might be here, it can be here. The retest can be here or it can be here, but that is what we're anticipating right now in the market because we already have our 1, 2, 3 touches, and then we haven't broken these lows here yet, right? Network is not on our side. Okay, all right, there we go. All right, so yeah, so that is basically what we'll be looking at now. We'll be waiting for this retest and a continuation, or if not, if we don't get the retest, then we know that we're still going to the upside, going to test. If we break this here, we know that from here, that's why we don't need to be biased. If we break this, we know that from here we'll be looking for the move all the way to the upside, ne? Then we'll find entries. So we'll get entries. If this market decides to do that, we'll do get entries. It's not a problem. We'll do get entries because the market always gives us opportunities. The market always gives us opportunities. But you don't need to be biased on the market. You don't need to be biased, and you don't need to involve your feelings and emotions, okay? Then to involve your feelings and say, no, this thing is selling. It is at the highest point. Hey, I'm selling because it is. Who said that is the highest point? You understand? You can say I'm buying. It's at the lowest. Who said that is the lowest point? You can still go lower. Okay, unless the market is at zero, then there's no lowest point. All right. So that is basically it about impulses and corrections. So let's just look at another example. Let's look at another example. Let us look at another example here. Which one is this? This is Euro USD. So let me just remove everything. Let me go to the daily. Let me just hide this replay button. Just hide this replay button. There we go. There we go. Okay. All right. All right. All right. All right. Okay. So remember what we do. Yeah. I am on the weekly. There's my weekly. There's my weekly. There is my weekly structure. Okay. There's my weekly. It's my weekly structure. I go in and take the ultimate highs, the previous ultimate highs, and the latest lows. Okay. Latest lows, So the previous highs, the latest lows. I can see we're impulse here, correction, impulse. So we're in the impulsive phase, okay? Can see that here already we're in the impulsive phase, all right? This is how this structure is. Remember, when you draw your trend lines, you must make sure that they are right at the wicks, right at the wicks, okay? Right at the wicks. So now looking at this structure here for me, this structure here, you can see that we had an impulse, a correction, and this correction is in the form of what? This is what we call a falling wedge, okay? This is a falling wedge. This is a falling wedge. So after this, we expect a impulse. And you must be asking yourself, where do we take profits? Our first take profits are at the highest point of the market. Okay, are at the last highs, their last highs. This will be our take profit. So the market always has a tendency 90. There is a 90% chance. There is a 90% chance of the market. There's a 90% chance of the market coming back to where it started. Always, either it be on an ascending structure or on a descending channel. So that is where our ultimate take profits are here. So now, looking at this, I go to the daily. Let me go to the daily now. I guess we've already identified where we are. Né? Let's go to the daily now. Let's go to the daily. So here on the daily, we can see what do we have. We have this impulse, correction, impulse, impulse, and then from here, what do we have? The market started a new correction here. This is just another correctional move. Yeah, this is a correction. Oh, I'm running out of time. Okay, this is a correction here. There we go. It's my correction. There we go. There we go. All right. So that's what we have. So the market, you can see, uh, the market broke out impulsively. So already it broke out here. It left an order block around somewhere. It left an order block around somewhere here. It left an order block around somewhere here. An order block is basically the last bullish candle before a strong upward move. Ne? The last bullish candle before a strong upward move. So when you look at this market here, when you look at this market here, you can see, look at this. You see? This last candle, you see it? This last red
Yes.
candle, yeah, this last red candle, after this, we had this strong impulsive move. So when this market comes down here, we know that we're going to get a retest. We know that we're waiting for this retest and a continuation up. You see? So this market will be waiting for this retest to come back and test these lows, because already we can see that we had an impulse and a correction. And this correction is in the form of what? A bull flag, okay? A bull flag. We already have our first touch. We have our second touch here. And then after that, what do we expect? We're expecting our third touch, okay? We're expecting our third touch. So if I just extend that, if I just extend that trend line, uh, like that. If I just extend that like that, you can clearly see that we have our first, second, first, second. So obviously we are expecting what? The third touch to be somewhere here. And this is confluenced again by what? Our order block. And then from here, we'll be expecting this market to shoot all the way up, okay? And test those areas there. We'll be waiting for the market to shoot all the way up and test those areas there. All right, one twat. So
Yeah.
let's just say, let me just go to the 4-hour time frame. We're going to start building a case of more evidence now. We're going to look for more evidence. That's basically what we do. We look for evidence. We don't just trade blindly. We look for evidence. We look for more evidence. we look for more confluence. So here we have the market is just going down, trickling correctively to the downside on the 4-hour time frame. So if I just wanted to do a quick play because I did a replay. I just want to see if the market is going to respect this our analysis. We broke out of the structure, broke out of the bull flag. We were expecting this, okay. We went down, we came back to retest this order block now. And then there we, well, okay, sharp. So you see what happened now, ne? See what happened. Instead of retesting this order block here, and instead of giving us this third touch here, we're still expecting this market to come back to this order block. We're still expecting this market to come back to this order block. So we see we had an impulse here. We had an impulse, correction, impulse. And then after that, what we have, it came back to retest this order block that it left behind after this breakout. That's what I'm saying. This one of order block will come back to it. Let me just remove this, because the moment if I start to add the order blocks now, you'll get more confused. Let me just remove this. But I just wanted to show. Let me zoom in. Let me zoom in here. Let me zoom in here. Then I just want to show you something horizontal ray. Just wanted to show you this, what we're talking about. So looking at this, look at this. You see where this market reversed? You see here, where this market impulsed out and then it came back all the way down here. When you look at your left-hand side, this side, it was retesting. There's an order block here. You see, this is what was happening. So it left behind this one. So this one now becomes irrelevant because it broke out of this one and then it created another order block here. That's why I'm saying that this one of order blocks will come back at them at a later point. So now let's focus on the impulse and correction. Let's focus on the impulse and correction. We'll get to that maybe in a day or two when we already have gained this aspect of impulse and correction. So after that, we can clearly see the market still continued to the upside. No? We just like we anticipated. We did anticipate that this market is impulse, correction, impulse. We anticipated that. Oh, my battery is a bit low. Okay, we anticipated that. So now, coming to this one, we're just gonna put. There we go. There we go. And then you focus on these two waves here. You focus on these two waves here. Focus on these two waves. So you can see we're impulse, correction. And then when you look at this market nature here, you can see that impulse, this whole move here to here. What do we have here? This move. See. Impulse, correction, impulse. What do we have? Correction.
Then impulse.
You see? Impulse. So now we want to see how far will this impulse go. So we're anticipating that this impulse can give us a reversal, either it be here in the form of a double top, or it can reverse exactly at this point here where it's reversing. Okay. So if this market breaks out of this top, if it breaks this top here, then we'll be anticipating a retest and a continuation. You see?
Oh.
So the moment it breaks those tops, they will be anticipating a retest and a continuation. So if you use a line chart, this is basically like this. It's like this on the line chart. This is what you'll see on the line chart. It should be something like this. but it's all impulse correction, impulse correction, impulse correction, impulse correction, just like that. That's what you'll see on the line chart on top. So
Yeah.
you know what? I think for now, I think today let's stop here on the impulse and the correction. We need to master this one. So tomorrow
Okay.
we're gonna do a quick recap on the impulses and correction as per schedule. We're gonna do a recap, and then what I would like for you to do, ne? What I'd
Yeah.
like for you to do in the meantime, you go and take GBP USD, you go and take gold, you go and take NAS 100, and then just go and identify as many impulses and correction as you can. Don't draw any structures, don't draw anything. Just identify impulses and correction using your lines. After that, you can screenshot. You know, this is where you screenshot, ne? This is where you take a screenshot here. Take a screenshot after you register for TradingView. Take a screenshot here, and then you can save your image. You see, you can save your image after that.
You
So
take a screenshot where?
yeah, there's a camera icon here.
Oh, okay. Yes, I see.
Yeah, Alt one S. There's a camera icon. Then you just try to find these structures. Just try to identify these structures. If you can draw, try to draw these structures. You know, from the weekly. From the weekly, ne? Remember, from the weekly. I want you to start from the weekly, ne? You start from the
Yes.
weekly. Start from the weekly. Try to identify as many impulse and corrections as you can. Try to identify as many impulse
Oh,
and corrections as you can. After that, you can draw in their structures. After that, you can draw in their structures. Ne? After in, you can draw in
okay.
their structures, and then you'll find Uri. Then tomorrow, during the day or whenever you are done, you can just send me the screenshot. You can just send me the screenshots, and then I'll look at them, and then I'll correct you here and there.